Max at Arsh, thank you. So anyway, I was just hanging out with the guys over there at Kit's space, and he had some technical problems. Disconnected him. I just didn't feel like going to bed yet. I just don't feel it tonight. So um, I was listening to a fellow talk about some hardships he's going through, and I mentioned in that space that I get a lot of that actually. I've had it since, I guess, COVID. People coming from different walks of life and whatnot, and asking advice on how to get through what they're going through, and most of them asking for quick fixes, sudden, solutions to a problem that, you know, I don't necessarily have a real fast remedy for. And some of them didn't receive it well. They tried to argue with me like I should bail them out, give them money to pay for this, that, and other thing. And if I did that with everybody that asked me, I would be broke. There's a lot of you that always ask, and I'm generous, I'm charitable. But if everybody asked for what they asked for, I wouldn't have anything. So it's kind of like when they say, Elon Musk, if he gave everybody $1 billion, he'd still have, and people don't know how to do the math. It doesn't work like that. But anyway, I don't usually have people talk on my space, but I'm going to let that happen tonight. So I don't know how it's usually done because I've never done it before. But let me see here. Hold on 1 second, okay? Mr. Tubik, I guess that's what your name is. Can you hear me?
Hello, can you hear me?
I can hear you.
How you doing? First of all, I just want to say thank you for all the knowledge you drop on everybody before anything.
That's
Um,
cool.
yeah, the purpose of the space is to ask obviously trading related questions. Is that correct?
It don't have to be. I've got insomnia right now, so whatever you want to talk about, it's cool.
I just had a question, if it doesn't bother you, about first presented fair value gaps, if you allow me to ask it.
Sure, you just did.
My bad. Okay, so basically, I just want to know what qualifies the gap, other than it being the first presented to be viable to take a trade off of. Does it have to come after a sweep of liquidity? Does it have to come? Does it have to have displacement, etc.?
Well, if we're going to talk about first presented fair value gap, let's assume for a moment we're just talking about the opening range first fair value gap. So that's between 9:31 and 10 a.m. Eastern time.
Right.
What I like to see is something in pre-session that has left a narrative undelivered. Meaning, let's say we saw relative equal highs in pre-session, and we felt that it was going to run for them, and it had already ran and made jagged on the lows. So sell side's been absorbed and it's been made jagged on the downside. There's relative equal highs that maybe we were expecting during 7 o'clock to 9:30. It didn't deliver. So what I would like to see is at 9:30, I want to see a displacement higher. It can be met with an initial drop first and maybe look like it's going to challenge the pre-session lows that are already jagged. So there may be like an inversion fair value if it trades down into something to that effect, or maybe a smaller short-term low. Either one's okay. But I'm looking for the market to want to like jolt higher. And that displacement higher is going to be in the form of a buy side about sell side efficiency. And if it forms in NASDAQ, I'd like to see at least 10 handles. If it's smaller than 10 handles, I'll be comfortable with waiting a little bit longer for a more sizable one, but it has to be in the direction I'm anticipating. So it's one of the things I'm seeing when people ask me all the time is, what am I looking for the first presented fair value gap? Well, it has to be part of a narrative. It has to be like I'm not looking to see which one it forms first. I already have an expectation of what I want to see. And it's either something that didn't deliver in the pre-session or that has formed in the first few minutes during the opening range. So it can be evolving. You can go into it like I just taught the other day on a session where I go into the day and I don't necessarily have a hard bias. So I'm letting the market kind of like dictate what it wants to show me, and then I'll trade the volatility. In that instance, I'm most likely not going to implement the first potential fair value gap because I have other tools that will, lead me into something else as a trade. So that is what I'm going to use here as a reminder to you that just simply because the concept is available, don't feel like you have to take every single trading opportunity that you think stems off of a first presented fair value gap. So your
Right.
question would be best answered this way. I like to see a minimum of 10 handles on uh, NASDAQ, 5 handles or 3 to 5 handles on ES. But since I'm predominantly a NASDAQ trader, I want to see it at least be 10 handles. It needs to be protraction where it jumps and displaces towards where I'm already aiming for. So I have to have a preconceived idea of what I think it wants to do for the session, not necessarily for the day, but for the session. And if I get that, and those criteria is met, and it's at least 931 or after, then if it trades back down into it, I'll use that upper half to start scaling in and building it up. If I get stopped out by using the first candle, number one candle's low plus a tick or minus a tick, I'll wait for it to trade above the fair value gap again, and once it trades back down, I'll go in again the second time with the same idea, same stop. If I'm stopped out there, then I'll close the session. I'll come back and maybe trade the lunch, or I'll trade the PM session. Or if I'm not really feeling it, I'll just don't do anything that day and come back, either in Asia or overnight and repair.
Awesome. No, you know what? Actually, I think for me, I was confused mostly about the size of the gap. I never really took that into consideration, and that clears up, a lot of confusion that I sometimes have looking for that first presented gap. So 10 handles on Nasdaq and 3 to 5 on S&P.
That has been like a the word's escaping me, but it's kind of like me compensating for the level of volatility that we're under right now.
Mm,
Before we got to these really big wide range days and lots of give and take intraday, it would have been just the first percent fair value gap, and whatever that size gap would have been, that would have been enough. But I've allowed for this, and this is something I have evolved into just because of the unprecedented measure of like in 34 years, I've never seen it like this. Like it's never been like this. And if you,
it's insane.
yeah, it's crazy. So I just use that as a general rule. Excuse me, general rule is to have 10 handles for Nasdaq. But it's not always like that because if you go back and look at the lectures before we started seeing these really crazy volatility days, which I kind of was telling you about, we were coming into these days eventually. Now we're in it. So a rule I built in to kind of like evolve with the present volatility that's underway, I just implemented it's going to have 10 handles because it will help me ferret out a better obvious displacement because if it's a large volatility, a 3 handle, 5 handle, this is, I mean, it might exist in price action and you might see it trade back down into that, but I'm not going to take that. I'm going to look at that bigger gap as that's the one they're probably going to use. And I will just use that smaller gap and maybe that might impact where I place my stop or how many contracts I trade with. So it'll
Yep.
allow me to put that stop in and kind of like encapsulate the whole idea with that extra smaller one. Does that make sense? Am I
Yeah, yeah.
confusing you by that?
No, no, I
Okay.
get it perfectly.
Yeah. So it was something I just recently rung in the last, 7, 8 months using that idea of this 10 handles for NASDAQ. But prior to
Mm,
that, it would have been whatever the first gap would have been.
yes, sir. No, I appreciate your time, and God bless you, man, and keep being a beacon of knowledge to everybody. It really changes lives for many, many people, and I'm sure you know that.
Thank you, brother.
Thank you. Bye.
Daniel, I believe you're next.
Hello, ICT. How are you?
How are you?
I'm fine. Thank you so much. I thank you for letting me speak. English is not my main language, so excuse me if I don't explain like correctly. So I've been trading for about 4 years. It will be 4 years now in 2 months, and I have some questions around psychology. So, um, wait, I'm sorry. Just give me a minute. Okay, I'm sorry about that. So I've been trading for about 4 years, and when it comes to like reading the charts and everything, executing and managing trades and all that stuff, bias, all the technical I do good there. Like it's not that I'm struggling. It's not that I struggle reading the charts, but it's when I do very good. That's when like things. That's when it like I fall off. So I don't know like how to fix this. I've been struggling with this for a long time. Can you guys hear me? All right. So um, I really struggle when it comes to psychology. Like I know what I'm doing, and sometimes I just know that I'm doing wrong, and I still keep on doing it. Um, like I have no problem executing. I have no problem like mapping my week, knowing when to trade, knowing when not to trade. But it's like when I can read the charts so good and my executions are so good, that's like when things really go very bad. For instance, last month I did a personal account with a deposit of $500, and I managed to trade that account to $7,000.
Well, I can see what Kit was wrestling with. It might be there's a whole lot more people on the app right now because of the time. So we'll see if we can get Daniel back on. Just in the event that we have the opportunity and privilege to be able to continue doing this, um, if you're going to come up and hang out and talk with me, you don't need to do all that preamble stuff to say, hey, thanks, and just get right to it. That way we all, you know, you don't have to tell me all that appreciation stuff. I get it. If you're watching my stuff, I know you appreciate it. It's good enough. But I'm just looking for Daniel again to see if I can find him. And I don't see him yet. So it's a Seek World. Oh, sorry. Can you hear me?
Hey, yes, Michael, can you hear me?
I can hear you.
Hey, Michael, I have a quick question about volume imbalance. I appreciate you letting me speak. Um, One of my favorite traits to take is volume imbalances, whether that's on weekly chart or daily chart. Now I know price is not going to run there, you know, automatically. Sometimes it could take days, sometimes it could take weeks, but I kind of have an idea when it's on its way there. So whether I'm shorting to the volume imbalance or, longing to the volume imbalance, knowing that that's where the price is going to go, I have two questions. One is, where do you recommend for to take profit? Like sometimes the price will go and it'll literally stay, not even touch the imbalance, like maybe one tick away or like maybe a few ticks away, and it'll start running the opposite way right away. And then a day or two later, it'll come back to volume imbalance and then go deeper in. And then the second question is, d- does that volume imbalance on the daily chart or weekly chart, like right now, we were going in and out of ES weekly volume imbalance for literally, I think, 3 weeks straight. But we don't have we never got a body close on the like a body close, like that basically closes the volume imbalance. I think the body closure was like halfway through, and then the rest was just like wick. My question is, it does that volume imbalance on the daily chart or weekly chart ever gets invalidated? If it wicks through, like, are we done with that volume imbalance, or do we need a body closure in order for that volume imbalance not to be valid anymore for future trading?
Okay. The idea of where to use it as a take profit mechanism, like it's a draw on liquidity. Is that what your first question was stemming from?
Yes, like on NQ, there was this one time when I was trading. It was a very good trade, and I'm in profit. Very good. Everything was good. It never touched the volume imbalance. It literally like a tick or two away, and it just automatically started running the opposite direction. And then later, 3 days later, I think, or second day or the third day, it came back down eventually. But yeah.
Okay. With all my PD arrays, in the beginning, when you're first learning how to trust them, trust yourself, your decision making, and staying with a trade, in and of itself, that's going to be a challenge for a lot of you because it's hard holding on to a trade, even when it's profitable and it's moving in your favor because you're scared. You're afraid it's going to turn against you. One of the things that I would advise you to do is try to aim for a PD array. But if the PD array, for instance, if you're long and you're holding your demo long entry, we have to speak in hypothetical terms now. If you're looking at that volume imbalance as a draw up for price, so it's a premium array. And let's say the low is 25,150 NASDAQ, okay, just for the sake of the conversation. That was the low of the volume imbalance and prices below it. There's nothing wrong with you using 25,145 as your target and then just simply watching to see if the volume imbalance even gets traded to at all. There's sometimes, because I'm guilty of trying to be too perfect with my exits and stuff, because I'm always trying to refine that, you may not get your best case exit rather. And in the beginning, it's real important that you frame the context of you exiting profitably in a graduated state of skill. You're not going to get your perfect exit, but trusting that it's going to get there over time. The way you get that is by watching it finally deliver or not deliver, but you don't have any more skin on the line or any dog in the hunt. So just below where that volume imbalance low would be when you're looking for it as an exit strategy is the same thing if you're using a regular fair value gap, or if it's an old high that you're aiming for that buy side liquidity. Who says you have to use an exit above the old high for it to be profitable? It's profitable right now while it's getting there, right? So graduating into that understanding is something you're going to have to work towards. There's no way around that. It's all part of the skill that you're honing. So don't feel that you have to have the PD array hit, whether it be volume imbalance or not. And now segue right into when I talk volume imbalance, it is something that is across all the PD arrays that I have. It's the one that you have to be most flexible with. So it's not as rigid as, for instance, the criteria around a inversion fair value gap. If it's a bullish inversion fair value gap, we basically are looking for a down close candle, a CIVI, to be traded above at a later time. And then we split that range of the imbalance in half. And then we want to see no bodies laid down in the lower portion of it, but the bodies have to respect the consequent encouragement halfway point in the upper half. And that would indicate that it's bullish. See how specific, there's very specific criteria associated with that. The volume imbalance can be traded back and forth through it many, many times because in essence, what it is it's a common gap that just so happens to have wicks laid through it. So it can be used many, many times over again because it's a pass-through PD array. Whereas a non-pass-through is like once the criteria is established for an inversion fair value gap, it has to meet that criteria, and it doesn't have the luxury of trading outside of it on its body. It has to do the very things that PD array calls for, or it's not valid. Unfortunately, if you're using the volume imbalance, you're going to have to be very, very flexible with it because it can be utilized many, many times. But when it lays a body down on top of it, me personally, I'm done with that one. And while I recognize it still exists in price and it may gravitate back to it at a later time, I'm not going to utilize it for an entry and I'm not going to utilize it for a target. I'll use something above it if I'm bullish or just below. Whatever the next PD area or next short-term low below it, I would use that. And that's the only thing I can give you in terms of the volume imbalance. It's pretty much basically what I've said so far, and maybe you didn't pick up on it, but it's the most flexible one where it can many times go back and forth. As long as it doesn't lay a body over top of the time frame it exists on, if say it keeps wicking in it both above and below, it'll keep using it. But when I see the body lay down over top of it and it completely provides a body range, whether it be an up candle or a down close candle, it doesn't matter to me. Once that's there, I'm aware that it's there in price action, but I'm not going to use it for any means of, not even for stop placement or management. I know it's there. It may use it. Price may use that, but I'm not interested in it at that point. Does that answer your question?
Yes, Michael. So if the volume imbalance is on a weekly chart, it has to close with a weekly body, correct? Because sometimes, like on a daily volume imbalance, when you look at the daily chart, like the daily candle will wick out of it, there will be no body closure. But on the 4 hour chart, you will see body closures. If it's a daily volume imbalance, a daily body has to close on. If a weekly body has to close on it in order for you to feel like, okay, I no longer need to, this volume balance no longer has any interest to you.
Carrying the levels, transposing those levels from the time frame that it forms on down to lower time frames is effective use of it. But whatever time frame it forms on, once a body's laid over top of that on the time frame of its formation, doesn't matter anything lower time frame because it will by definition go back and forth and you'll see bodies laid down over top of it. But wherever you noticed it and you classified it, okay, that's a volume imbalance on the weekly chart. Once the weekly chart lays a body over top of that, it's no longer valid to me.
Got it. So weekly volume imbalance, weekly body necessary. Understood. Now on the ES, we were in and out of that weekly volume imbalance for like weeks, for days, right? We have a body closure, but not all the way through. Does that mean that the chart has left that portion of volume imbalance not without a body closure, because in the future we're very likely to see the price come back up? Yeah, maybe.
It could. I'm not going to sit here on a Friday night without the chart in front of me
Yeah.
and give you my. I don't know. It could do that. Yes, but
Okay.
if it's laid the majority of a body on top of that, even on a weekly chart, me personally, I probably would look at that and say, okay, there's probably going to be something else I'm going to use because I wouldn't want a body laid down inside of any portion of the volume imbalance. Once a body's inside there and there's a close of any kind inside that, I'm not interested. That means you laid a body in it. When I first kind of like coined the idea, it would have to be a complete cover of that volume imbalance. Any portion of it now, because of the volatility we're at, I'm okay with saying I'm done with that one. Let me look at something new.
Okay. Thank you so much, Michael. Thank you.
You're very welcome.
Bye.
Daniel, we're going to try you again. Can you hear me?
Hello.
Go ahead.
Thank you for letting me talk again, ICT. So I was talking about if I could ask about some psychology.
What are you struggling with?
Okay, so first of all, as I was saying, I don't struggle with technicals. Like what you teach is very. I do understand everything you teach, and I have like found my own trading style. So I don't have any problem when it comes to when to avoid trading, when to trade, when not to trade. Um, just general price action. Like I don't struggle with that like at all. What I struggle with is being overconfident. Like when I win a lot, that's when it becomes bad. Like when I can read the chart so good and my trades are good and I'm like all green or all in profit for the week or for the month, I just fall off because of my overconfidence, and I I think that I can like keep on winning, so I just fall off. Like I think it's overconfidence, and I'm not respecting the risk anymore. When things go very well, that's when like things go very bad for me. Can you hear me?